Welcome to price action geometry analysis. So in this topic, I'm just going to do a simple analysis, which is going to be demonstrating on how we can find extreme points or reversal points on a price chart. So this is the Great British Pound in a 4-hour chart. If I was to ask, how did the market reverse here? Was it that it reversed by random on this low here? The FX market, it is a byproduct of what human beings invented, meaning that people are the ones who made the price chart and everything which represent it. So if the FX market is made by people, why is it so hard to analyze it? Because if you make something, it shouldn't be hard for you to understand what you make. So I'll just demonstrate a simple technique which you can use to capture these reversals on the price chart. I'm going to take a trend line. I'm going to plot or join this high here and this sloped line. I'm going to touch it here as my first area and the second area, which is here. So once we're able to join this area here and this area here, the next two which I'm going to collect, it's a Fibonacci retracement. On a Fibonacci retracement, I'm going to pick the swings before or the swing which made this high and just the last swing, which is this one. Pay attention to what I'm going to do. I'm going to click here on the high. And then these ratios for the Fibonacci retracement, first we begin with the low because we want those levels to be displayed down here like this. So once these levels are being displayed on the bottom like this, the next thing which I'm going to do, I'm going to take this same angle which the market was falling. I'm going to plot it or ground it on Fibonacci ratios. Is what I'm going to do next. So I'm going to copy this line. I'm going to copy it like this. Then I'm going to insert it on 1 point. Let's look at this. When the ratio was 1.618, price did not reverse from this line here. But if we try to put it on the second line, we used this one here, 1.618, price pierced this line. But when we insert this same line, sloped line, we insert it at 2.618, you can see that it was able to capture this movement here. So if it was someone you wanted to buy at this level here, you were going to experience one loss. But when you copy this same line, you drag it down, you insert it at this 2.618, the market now it reverses. So you cannot know in advance which level of the Fibonacci retracement which is going to reverse price in the future. So that's why it's very important to trade with risky money management. If you fund in with 50 USD, divide that 50 USD in 5 trades, meaning you're going to be risking 10 USD per trade. So if you lost this trade here, I lost a trade here, I still have bullets to go and trade again because I'm using a good risk money management. So if I buy here, this profit, it's able to take care of just one single loss. And I'm able to recover from the past trade. So let's look at another example again. Let me remove this. This time, we want to find out how to capture this reversal on top here, like the way we did using a trend line. meaning we're going to use the past price data. So I'm going to connect this law here. So this is how professional traders use trend lines, not the trend lines which you guys use to come and buy here. That's you're going to be stopped out unnecessary in the market. But if you use this same trend line like the professionals do, you'll be able to make money with it. So after you join this law and this law here, the next thing, get your Fibonacci retracement, drag it from this high here. Remember, I'm picking the past swings or the past price data, which I'm able to see a swing from low to high, high to low. So once you do this, we do the same. We copy this line once more. So once you copy this line, I have copied this line, or I've put this line on this straight line of the Fibonacci. That's why I'm plotting this. I've put this line exactly here at 1.618. So after price, it was moving up, we extrapolate this line or we copy it above. If you can see, it was able to capture this reversal here, where the market changed its direction by using a trend line, a Fibonacci retracement, and grounding this same projection angle on the Fibonacci ratios. We're able to come up with a sell accurately. So let's do another one, like the way we have done with the rest of these others. Another example. This one is where the current market is. So I'm going to join these two laws, which I'm able to see on the past price data. So once I join this law here and this law here, what next am I going to do? I'm going to grab my Fibonacci retracement once more again. So once I extend it to this high, I'm going to copy it like the way I did. Then I'm going to insert this level at 1.618. So at this point in time, price has not yet reached this line. So we are going to wait until price reaches this line, then you can take a trade. So this is how you can use trend lines in a sensible way, like the way the professionals do. So I was your mentor, Thomas Delalu, signing out.